So let's break it down on a geographic basis right now. First of all, we're taking a look at how SABMiller and British American Tobacco are exposed to the markets in the Americas. And I guess that some distinction has to be made here between North America and South America. Specifically, the perception is that they'd be doing well in a territory like South America with that emerging market status that's attached to it. But that's not necessarily the case.
Yes, so you're right. Normally one talks the Americas, but you're including the United States of America and Canada, and then what they call Latin America, which basically means where people speak Spanish and Portuguese. Okay, so British American Tobacco is not in the US market, but they are. They have a 42% stake in a business called Reynolds America, which was the combination of Brown and Williamson and Reynolds, which they kind of put together. The reason they did that is they wanted to ring fence the litigation risk, which is most substantial in the United States, because there the government basically sued the cigarette companies and came up with a big financial settlement where those cigarette companies pay big fines and taxes to kind of cover the cost of healthcare associated with the downside of the product. Having said that, they do exceptionally well in all the other markets because those are still sort of emerging countries where a higher percentage of the population still smokes. So this is going to be the recurring theme. Declining volume sales, most substantial declines in rich countries where people are better educated, still rapid growth in these other countries, but good pricing power because British American Tobacco, again, leading with these 4 global brands of theirs, you know, the ones we'll talk about in a minute.
Yeah, absolutely. And when we're looking at how they're exposing themselves to these territories, a strategy comes to the forefront very aggressively. We're looking at their price strategy more specifically to get a sense of how they're looking to, if they're using that as a tool to drive demand and build demand moving forward.
Yeah, I think it also just shows you how big you have to be to get around the excise taxes that they're putting on, because you have to produce so much and so efficiently. So it's very hard for a small player now to come in and have these very large taxes, especially in the Western economies. So they have to have massive scale to be able to produce at much lower costs. And British American Tobacco and SAB both have massive scale, so they can produce at a much lower cost than a newcomer. So the barriers to entry protect them in these, even though there is high taxes, they do protect them.
It's very interesting because I picked up that BAT saw declining demand in the territories as they lifted prices in order to offset slower volume sales specifically. And so that is a strategy that didn't pay off for them very well, and neither did it pay off for SABMiller because they introduced price increases in some markets. It's hard to get away from that, but it did them a disservice.
Yeah, it's a tightrope for them in each of these countries because in some instances they've relatively new arrivals. British American Tobacco, I think, bought some company called Pro Tobacco or something in Colombia. And what they do in that case is they take an existing brand and normally quite poor production technology, and they jack it up, they improve production, they get the costs down, and then they improve the marketing. Then they come with the 4 kind of global brands, which are Dunhill, Pall Mall, Lucky Strike, and Kent. And they try and get people to smoke those by preference to other cigarettes, and the prices of those are obviously much higher. So in most of these countries, as you say, there's a problem, there's smuggling, there's like all kinds of pricing, there's excise taxes, but people are addicted, so they go on smoking the brands, and then they try and force up the prices. And they normally kind of get away with it in some markets, and in some markets a little bit. Well, it depends on the mix and, you know, whether there's more competition or not.
Of course, they're very keen on working out how to get a handle on these markets. We've had SABMiller saying that it's not concerned structurally for the region. They admit that Latin America is 30% of group earnings and will remain vigilant on growth in this region moving forward.
Yes, so I think also they put the prices up in certain of their premium sectors in those areas, and they start to make a lot of revenue from them, but volume goes down. So you see that volume went down for British American Tobacco and breweries slightly, but the profit margins were still there, so they kept the profit margins up. So volume came down slightly, but because they've got better techniques in producing those products, and especially the higher brands that they bring in, they're still making really good revenue, and that suits them.
I just want to talk about SABMiller in the Americas, because this is critical. The business in the United States of America is not doing particularly well. Remember, they bought Miller from Altria, and then they merged it operationally with Coors, so that's Miller Coors. Beer consumption in America is going down by like 3% per annum. Nobody quite knows why, except that the sort of middle classes are moving to alcoholic pop drinks and what have you. Beer is sort of a working class drink, and its consumption is declining, plus there's all those craft beer guys. Contrast that with Latin America, where that deal to buy Bavaria in Colombia and all of their associated Latin American businesses was an absolute winner, because they took that Santo Domingo group out of Colombia and gave them shares in exchange for the business, and they've just made so much money there. It now contributes nearly a quarter of SABMiller's global profits.
Yeah.
Wonderful business.